We are glad to have with us today a representative of NSITF, who is going to be taking us through the discussions. And the discussions we are having today is the Nigerian Social Insurance Trust Fund, the law, compliance, and benefits to employers and employees. So Dr. Chidebere Nwaguso, over. Can you take over from here, sir?
Good morning, dear friends. Good morning, my distinguished colleagues from the civil service groups, NGOs. It is indeed my pleasure to be with you, and I count it a privilege, really, to inform you or to be engaged with you in our continuous drive to have all employers of labor come to see the benefits of complying with the Employee Compensation Act that the Nigeria Social Insurance Trust Fund manages or administered by law. Suffice it to say that this is a very proactive step and quite responsible of the scale group to invite us to share our experience and share values with you. So we will go straight to the presentation as we have it here being shared. So the objectives of the presentation is here. Clearly, we have the presentation synopsis here, and we'll give you the information on the history behind social security insurance, how it started globally and how it is domesticated, and eventually how Nigeria, being a signatory to those global institutions, eventually ratified social security management and application in the country for us to administer to our employees. We have it on record historically that the word security was first recorded in the 14th century to the mid 14th century, coming from the word securita, or Latin word securitas. It briefly can be described as a way of protection against risk caused by external or internal influences. We can categorize them into four broad contexts, which we share with you here. If with this, we are looking at the monetary context. In monetary context of security, we are looking at economic security, financial security, and then social security, where we are operating from. That's the space we're operating. Then we have the IT context, which speaks to communication security, computer security, data security, and the like. And then we have the political context. Of course, they all have relationship, because when we talk about internal security and human security, sometimes we also talk about the ungoverned spaces which the political security is supposed to manage and administer. And then we also have the physical security. Here we talk about environmental, we talk about the food security. Yeah, border security, physical security speaks to this. Now, we want to look at where social insurance or social welfare programs, how did we pick it to become a concept that a state or a nation state should manage. We want to give credit to the first chancellor of the German nation states. In the mid-18th century, in order to fight back against socialist tendencies that were coming from the French angle, the Russian angle, and the Hungary and Prussian nation states that were surrounding him, he found it expedient to enact the laws that gives the workers some level of attention which the political class and the bureaucratic class have been enjoying. What are these policies? What are these policy structures or reforms that the chancellor had to do? One was the health insurance scheme in 1883. Then the workers' or workmen's compensation scheme in 1884. And in 1889, the old age and invalidity pensions. The question becomes, why would an autocratic chancellor who had all the nation in his grip have these provisions for workers who constitute very weak elements militarily? And the answer came to us that he recognized that these are, okay, sorry. So he recognized that these weak elements within the nation states are those that are easily drawn to the socialist tendencies that were around him, and eventually gave us the start to social security scheme and social insurance schemes that speak to workers' welfare. Going forward, eventually, as nation states developed, they created multilateral institutions like the United Nations, who eventually drew from these basic principles of social security, workers' welfare, and made them into conventions that will be globally applied, especially as civilized nation states join in peer review environments in these multilateral institutions. And this led, for instance, to the ILO conventions on securing the workers, getting workers' welfare. Under the ILO Convention of 102, under the Convention 102 of the ILO, which from where we drew the ratification to apply or implement the workers' benefits, there are 9 pillars of these social security benefits that should be administered within a civilized nation state. These are, number 1, we can take note of these now: medical care, sickness benefits, unemployment benefits, old age benefits, employment injury benefits, family benefits, maternity benefits, invalidity benefits, and survivor benefits. We, within the Nigerian space, are eagerly expecting that Nigeria, being a signatory to this convention, to ILO convention, will eventually someday implement these 9 lines or pillars of social security. But from our own end as NSITF, the act has enabled us, to implement an aspect of the employment injury benefit, which is called within the Nigerian space the Employee Compensation Scheme, that is powered by the ECA 2010, which was signed into law. And the legislation provides the administration of employee compensation scheme, which also aligns itself with the ratified ILO Convention 102 minimum standards of social security provision in a civilized nation state. This part 5, or that 5th pillar of social security provision in that convention, which we listed out now, is specifically to benefit the employees in the event of injury. It specifies that a person who is employed within the territory of a ratifying member country be covered against or secured against workplace injury. So essentially, we have drawn from where social insurance or welfare benefit to workers started, how eventually multilateral institutions adopted it, and eventually countries that identify themselves as developing and civilized plugged into these conventions that have become of global practice. We also can actually review the standard of living of a country by virtue of their implementation of these ratified coverage of social security provisions. At this point, when I got to this point, what I did was to draw us back, to draw us where we have, what we have covered, where we started, how it became a global practice, and then the ratification. Then we stated that upon ratification, it becomes mandatory for the member countries of ILO that ratified the ILO Convention 102 to implement these pillars of social security benefit. For us, in NSITF, the pillar that we are mandated or applied to implement by government enactment or legislative enactment is pillar 5, which is the employment injury benefits. And we said that we are looking forward in the future where these 9 pillars of social security benefits that we are signatories to as a nation will be implemented. However, we have started from the pillar number 5. And so therefore, in line with the Act, the Employee Compensation Act, I want us to understand that the Nigeria Social Insurance Trust Fund, which we'll see in our organizational evolution, have managed at every particular time some aspect of these social security benefits. As we speak now, the fund under management is for the scheme, the Employee Compensation Scheme, which the Act gives us provision to implement. In line with the Act, it made comprehensive provision for payment or compensation to employees who suffer injuries arising from, or who sustain injuries arising from or in the course of their jobs. Work-related injuries, diseases, disabilities, and the like. And we are stating here that being a compulsory scheme for employers to subscribe to, the management of this scheme is given to the managing board or management board of the Nigeria Social Insurance Trust Fund. So we have established a relationship between NSITF and Employees Compensation Act, and that the Employees Compensation Act of 2010 gives us the latitude to implement the Employees Compensation Scheme. And that is the one we are saying that every employer of labor is mandated by that act to implement. Now, having said that, and since the topic is actually speaking to NSITF as an institution, how have we evolved to the point of being given this mandate to administer the ECA? Well, from the history of the fund, it started first in 1961, not known as NSITF or Nigeria Social Insurance Trust Fund, but known as the National Provident Fund. It was mandated, it had a mandate then to administer and provide a poverty alleviation measure as required by the ILO. Following the abolition of the NPF, we evolved through the Technical Committee on Privatization. We evolved to be known as the Nigeria Social Insurance Trust Fund in 1993. What was the mandate that was given to the fund, or the Nigeria Social Insurance Trust Fund? It was the management of pension scheme for workers in the private sector up until 2004, which we all will recall with some gratitude to the reforms that took place within that period during the Obasanjo regime, that we had the Pension Reform Act. And so from some element of defined benefit scheme, we moved to the contributory pension scheme, which the Pension Reform Act of 2004 and amended 2014 has brilliantly managed and assuaged the pain of the pension earners, or those who enter into the scheme of contributory pension. Now, consequent upon that reform, what happened was that the Nigeria Social Insurance Trust Fund transferred its pension assets to a pension fund administrator in line with the Act, as stipulated with the Act. NSITF was no longer to manage a pension scheme. And so we had to transfer the assets to a pension fund administrator. And what that meant was that NSITF was, by that act, asked to establish or key into the reform then by establishing a PFA, which is the trust fund PFA now. So all assets, or the pension assets, was moved to it. And eventually in 2010, an act that gave NSITF another fund or another scheme to manage is this one now we call the Employee Compensation Act. Under this act, the institution, NSITF, having over the time managed series of social security funds, the government found us good enough to manage this scheme. And since 2010 till now, we as NSITF has been doing that. What structure do we have on ground? Just as you can see on the screen, we have where the structural organization or administration of the fund is along 11 regional offices and 56 branches spread across the the country. And these branches are responsible for meeting you, the employer, at your place of need with regards to compliance with this act. Essentially, they help you to comply, the branches help you to process claims and also administer occupational safety and health activities in order to make the workplace environment good enough for efficiency and productivity. So after that ECA was passed into law, as I have said, NSITF commenced the management of the ECS in July 2011, wherein every employer is legally obligated to comply with the scheme by making a minimum monthly contribution of 1% of the total monthly payroll into the fund. Emphasis here should be placed on two words, or two items rather: minimum monthly, 1% of the total monthly payroll of employees into the fund. This pool of fund, or this pooled fund, is a resource managed for and on behalf of the employers to enable the resources or the pool of fund under NSITF is to meet with the objectives of the Act as recommended, of course, as recommended there in the Act which we have stated. The aspect of the Act which eventually, after this presentation, we will share with Dr. Timmy to share with our friends the soft copy of the Act. Under Section 1 of the Act, we have the objective, but generally speaking, this is what it is here, the objectives of this Employee Compensation Act. First one there is to provide a guaranteed and adequate compensation to employees and their dependents for any eventuality of deaths, diseases, injuries, or disability in the course of work. Provide rehabilitation to employees with work-related disabilities. Establish and maintain a solvent compensation fund in the interests of employers and employees, and to provide a fair and adequate assessment for employers. When we stated those two items I mentioned earlier, we say minimum of 1%. But as the program or the scheme is being implemented, we also experience that some employers actually introduce a higher risk factor to the fund. And as such, there could be some times of reprising their risk contribution into the fund. That's why we say the Act provides an objective to provide fair and adequate assessment for employers. Another one is to provide a simple, fair, and accessible appeal procedure with minimum delays. And also, the stakeholders we relate with, which includes the employers and the government and employees, which the NGOs here gathered are part of. Also, we engage them, or the Act provides that we engage them to in occupational safety and health enlightenment and advocacy in order to make the workplace conducive. The idea is to ensure that it is not just a compensation project. It is also a way of making sure that workers go to work with their full limbs and go back to their families also complete. All right, we all identify that the formal scheme that was repealed for us to have the employees compensation scheme on board, which is the workmen compensation scheme then, was a scheme under the insurance companies that operated with the idea of no contribution, there will be no cover. And also the principles of insurance that makes it that you must prove that these events actually happen before you are paid your compensation. In this scheme, it is actually a no-fault scheme. So long as the injury has happened in the course of work, it is not the business of the scheme to start to say or to start to get to investigating who was at fault for this action to have. Is it the employer? Is it the employee? No, the scheme is made to make workers who come to work go back, and eventually, if they sustain any injury in the course of work, take care of them, compensate them. The scales of compensation that is provided for under the Act are as shared here. Compensation for injury, compensation for mental stress relating to work, compensation for occupational disease, compensation for hearing impairment, compensation for injuries occurring outside of the normal workplace that is stipulated in the Act. What are some outside work environment that are captured as worth compensating under this scheme? The ECS also provides for vocational rehabilitation and counseling under the section 16, subsection 1 and 2 of the Act. These are the scales of compensation that the Act provides for. Having stated the scale of compensation or benefits that are derivable from the Act, we move on to asking, what are you expected to do? The next slide, what are you expected to do to show compliance, to demonstrate compliance with this Act as a responsible corporate citizen? Number one in the process is you are expected to be identified as the employer. You will be issued with registration forms, which you will fill, allocate a registration number to you by the branch, especially that manages the area of your coverage. Then you would have to furnish us with your payment schedule, upon which the 1% of the total employer's remuneration would be assessed, and the fund does not accept either transfers or cash. It's through the gateway that the government is accepting payments, that is the remitter. The print advice would be given to you, then you pay directly into that account. We operate under the Treasury Single Account policy of the government. And then upon presentation of your payment, you are issued the receipt, and then you would process the compliance certificate eventually. These steps are what you will have to undertake in order to comply. Upon identification of interest, obviously, the nearest branch to your area of coverage, to your workplace environment, will be made to come to your environment for all these processes and guide you appropriately. These are samples of the fund, the registration, sample of our registration form here, which we have shared that you may see. It's called the REO1 form. This is the registration form. You fill it, and then your process of compliance has started. This is what a normal payment schedule it looks like for the computation of your 1% to the fund. We have stated this earlier. So upon issuance of the receipt by the branch, we start processing the compliance certificate that gives you the leverage to say, yes, indeed, aside from other requisite statutory payment, you have also complied with this payment. Yes, are there penalties stipulated in the Act in the event of non-compliance, in the event of recalcitrance? Section 39, subsection 2 of the ECA 2010 gives, and section 46 gives penalties. I will read it clearly. It says, failure of an employer to comply and provide estimate of payroll is liable to pay, he is liable to pay as penalty for defaults a percentage of the assessment determined by the board, and the board may determine its own estimate of the payroll, assess and levy on that estimate, and the employer is bound by it. And then section 46 clearly says that if an employer fails to pay an assessment when required, the board may assess a penalty in amount equal to 10% of the unpaid assessment, and it will be enforced in such like manner. Section 71, section 1 of the ECA provides this penalty. Any person who contravenes any provision of the Act for which no specific penalty is provided commits an offense and shall be liable on conviction to a fine of 20,000 for the first case of non-compliance, or imprisonment for a term not exceeding 1 year, or 100% for every subsequent case of non-compliance, or to both imprisonment or fine. Surely, as a civil society organization, as non-governmental organizations, we wouldn't want to find ourselves being taken to court and being convicted as a corporate citizen that is running a criminal, that is running a criminal enterprise by non-compliance to statutory provisions of the Act. We wouldn't want to do that, especially we, the civil society organization, the NGOs, and also social institutions that some hold government to accountability, and individual organizations and MDAs to accountability. We would want to comply with this law so as to be seen as practitioners of what we preach. Okay. After your payments or after your compliance, in the event that these deaths, injuries, diseases, disabilities materialize in the workplace or in the course of work, how do you progress to making claims? In part 2 of the ECA 2010, it defines and explains the procedures for the employer to file for claim, some of which include that the claimant must be an employee of an employer, in your own case now, the CSOs and the NGOs, duly registered and contributing to the scheme. Within the scope of the Act, every case of injury, occupational disease, or death, the dependent must inform his or her employer within 14 days of its occurrence by giving the following information. Take note of this information: the employee's name, the time and place of occurrence, and in plain language, in ordinary language that is not ambiguous, the nature and cause of disease or injury or even the death. The employer shall report to the nearest NSITF office with the information received from the injured employee or dependent of the employee in the case of death within 7 days of receipt of the information. Now, this report will be made through the fund's claims fund, which we identify here as the CCF01 form. So in order to complete the claims application process, the employer must duly submit these forms. We have mentioned them here to the nearest NSITF form, the NSITF office. And then upon submission, the claims or the scale of compensation will take effect. Section 17 of the ECA covers this scale. We have itemized them earlier, but some of them are also mentioned here. Compensation for fatal cases, compensation relating to enemy or warlike action in the course of work, and then compensation for total or partial disability. Of course, we mentioned death benefit the last time. So what has been our experience in the last 10 years of managing the ECS? Well, currently, over 1,576 workers benefit from the NSITF or the ECS fund monthly payments. And within this period under reference, over 77,000 employees have benefited across other contingencies captured under the ECA. And over 4 billion has been paid in compensation via their employers, while more are also being processed daily. Our claims come in daily, and we are happy to live up to this mandate that is given to us for administration by the government. All right, we have stated the history, the global application, the domestic application of employers' employment injury benefits. We have also stated the vehicles that have been enacted by the government in order to manage it here. We have also, in the course of this presentation, stated that the only institution allowed to manage employment injury benefit in the country here is NSITF. We are hopeful that if given the performance we have so far given, or in administration of this scheme, we are very hopeful that the government in the near future could add some other social security benefit administration scheme to NSITF. So what is the benefit for employee, your employee? Employees' remuneration, some of the benefits we will mention here includes that the employee's remuneration is not lost as he or she is compensated for injury arising out of or in the course of employment, thereby improving the quality of work life and work experience of the employee. In case of death or disability, whether it's permanent or temporary, the dependents are not left destitute as the dependents. Sorry, the dependents of these, of those who are permanently or temporarily disabled in the course of work are not left destitute, as the scheme provides compensation for fatal cases and even retirement benefits. Any employee can always return to work on the platform that the ECF provide, which is the vocational rehabilitation component of our scheme. Workers are assisted to get back to work and remain productive. The employee is also benefited from the OSH awareness function of the scheme, which guarantees or advocates for a safe and healthy work environment for the employee. What of you, the NCOs and the NGOs? What of you? What do you stand to benefit? Is it only the employee? No. The employer also benefits. One is that the employer's sustained profitability is guaranteed, as the scheme covers loss of productivity benefits, which accrues to you. Productive outputs are enhanced as the employees are assured of improved welfare. Hence, they are motivated to work, knowing fully well that whatever eventuality happens within the workplace, that they are covered. Employers can optimally allocate capital resources to other aspects of their business, as the burden from employees' medical expenses rests squarely on the fund. Medical expenses that medical expenses that are resulting from injuries or disabilities in the course of work. May I ask here am I being heard?
Yes, you are being heard. Please go ahead. You are being heard, yes.
All right. All right. Thank you. The class is a bit, now I can go ahead. So the employer has his own benefits. His productivity, his bottom line in financials are enhanced because you have a motivated workforce, a workforce that is not shying away from doing the job simply because if anything happens to me now, it is me, myself, and I. So, and if you make any medical expense on your injured worker, so far as the injury is sustained in the course of work, of course, you will have your medical expense refunds. How does the government benefit? We are all benefited, both the government, the employer, the employee. In the case of the government, the motivated workforce of the country enhances productivity. And from economics background, when productivity goes up, of course, our GDP growth becomes competitive. And poverty indices of the nation declines as compensation and retirement benefits are paid to employees who suffer workplace injury and disability to ensure that citizens do not fall into poverty. There is also a reduction in social gap here between the rich and the poor as the ECS bears the burden of meeting requisite social demands in covering those gaps. There is also socio-political stability that is achieved through the ECS provision of social insurance. Hence, the nation is assured of self-reliant, healthy, and responsible citizenry who are at work. Now, the government is also relieved of the social malice of destitution as some components of its ungoverned spaces that results from workers who lose their limbs, who lose their jobs, and others in the course of work, they are no longer in the streets because the stability in their life experience that is offered by the scheme also affects the stability of government. We have operational challenges that we want to share with you. And these operational challenges, as we have it here, as we operate this scheme, are incomplete documentation of relevant forms by employers. When you enter into the scheme, some will give them the forms that are relevant and they leave off some. So in the course of maybe administering claims, you find out that there is incomplete documentation. Or in the course of you applying for compliance certificates, we also find out incomplete documentation. These are some operational challenges that we have faced. Then employers' recalcitrance and non-compliance. This is very key operational challenge that we have faced over time. And this engagement with the NCO and NGOs gives us a very warm latitude to know that there are corporate citizens and fellow citizens who are interested in complying even without being forced to do so. We have delayed reporting of injuries and diseases, inaccurate employee data. Some people will have 100 workers and they will tell us they only have 3. And eventually some of those that are excluded would have one injury or the other that is not covered. Then we have poor culture of non-compliance with legislation that requires employers to pay some levies. Inadequate knowledge, and this engagement helps us now to that you too will share to become advocates of this scheme, knowing the benefits to employers, government, and employees. Yeah, this is a way of reaching out, and we really appreciate it that it is actually an offer coming from corporate citizens who want to be responsible citizens and helping in driving government reforms, such as the ECA. Thank you very much for your time. We really appreciate this, your keen attention. We are grateful. From our side here, we can only say thank you very much.
All right, thank you, Mr. Olabi, and thank you, Dr. Wangozo. That was very detailed, and I'm sure all the listeners are very well informed about the activities of the NSITF. I think before now, for some of us, we weren't clear as to what the NSITF is doing when we have the pension funds body. handling pension activities. So we thank you for this detailed presentation. We have taken us through the historical pathway, how the genesis of social security, the part of it, how it came into the world, and get into the United Nations and taken up by the International Labour Organization. From my own knowledge of the social security, and I think you also mentioned it, at the beginning, the Bismarck system, which originated from Germany, is a financing system that provides financing to social security issues through a contributory scheme like we have. And this is a scheme that has spread from Germany to Belgium, the Netherlands, and several other countries, including Nigeria now, where we have our own form of it, having subscribed to the United Nations Charter and the ILO conventions. So it's a contributory scheme between employers and employees, service providers, public and private entities are involved. And it provides pooling of insurance, of risks. When you pool risk, you sort of spread the risk, among various people who might be affected, so that people can reduce the extent to which they can be exposed to such risks. And you've taken us through the genesis from since 1961, when we had the NPF, and then up to 1994 and 2010, when we have the Pensions Act, and then we have the NSITF Act, the Employee Compensation Act of 2010. So you've taken us through all this history, and you have provided the operational basis, of which the NSITF itself is the manager of this employees compensation scheme in Nigeria, which is the body that is created, by the Act. One of the things I would like to find out, because we are dealing with civil society organizations, could you shed light on how civil society organizations, because we talk of employers and employees benefiting, shed light on how civil society organizations will benefit from this scheme. Before we go into other details of the questions that will be coming up, I have a few questions as well, but could you shed light on how civil society organizations, non-governmental organizations who are not into maybe production of manufacturing or things that are hazardous in terms of what they produce, or going to risky ventures that we attract various accidents in the workplace. Please shed light on how civil society organizations can benefit from this scheme, both the employees of civil society and the employers of labor and civil society organizations.
Thank you very much. We are grateful. The civil society organizations and the NGOs, first of all, operate within the space of the nation state, and are also obligated to be corporate citizens that are compliant with the laws of the land. I am aware that the NGOs and the civil society organizations have employees move around within the nation states in order to achieve their own objectives. For instance, we have some NGOs that are even working in our disturbed environments, like in Maiduguri, the Northeast, gathering data from one end of the nation to the other, while civil society organizations may not be exposed to the hazards of cutting their limbs in machines, they are exposed to the hazards of accidents on the roadway. They are exposed to the accidents by warlike situations in environments they operate. As they go about gathering information, gathering data, and in their work of supporting government, man, and humanity. So as such, since we are engaged in any form of work or in all these forms of work, and therefore exposed, we cannot but help ourselves to comply. It's just like saying because teachers, the chalk does not fall on a teacher and he dies. For that reason, the teacher is not exposed to any workplace injury or risk. We have had teachers who fall off from the staircase. And we have also had teachers who slip off the surface. So we are all involved. That is why when we started, we said that minimum of 1%. Upon assessment, we can say, okay, the NGOs are not exposed to hazard, nor introduce much force of risk to the pool of funds and resources under management. As such, they can remain within the statutory minimum of 1%. But those who are in the forefront in working with machines, whose experience working with electric poles, whose experience introduce higher level of risk into the pool of funds, can actually be reassessed. So your answer, the answer to your question is that we are all exposed to some element of work-related risk, so long as we are going out and leaving the house, and as such should be covered. In any case, the justification that superimposes or that gives much force is the justification that complying is being a good citizen that obeys the laws of the land. And the NGOs and CSOs are people we rely on to be advocates of good governance and also engagement with the government in behalf of the citizens should be seen to be respecting and complying with laws that are clearly stated to be applied to their workers.
Please raise up your hand if you have any question. And while I'm searching, looking for those who have raised up their hands, Dr. Wangoro, could you clarify for me the minimum when you talk of registration with the NSITF? Is there a kind of a minimum number of employees that an organization should have to register with the NSITF? Is there a minimum?
Okay, the minimum is one. The minimum is one.
Okay, so as long as you have one employee in your payroll, you should register.
Yes.
I see. Okay.
And the managing director is the #1 employee of his environment.
If you are a sole employee, you are the only one employing yourself.
Yes.
All right. Yeah. So one of the participants asked wish to know what category of issues or injuries outside workplace are compensable and what amounts or monetary terms is allowable. That what category of issues or injuries outside workplace are compensable and what amounts or monetary terms is allowable. That's from one of the participants.
Okay. By the conclusion of this presentation, we are going to share with the organizers the Act, especially in second schedule of the Act. It addresses the categories of injuries that are covered under the question of Augustine deaths.
Yeah. Okay.
And then the part 4 of that schedule actually also gives a scale of compensation as to the amount that employees who suffer such workplace injury, it is well graduated, and we will share it so that since all of us gathered here, we have agreed that we are going to share these resources. It is quite comprehensive, and it will also be a resource for all the CSOs and NGOs that are now wanting to comply.
Somebody wants to know whether there is whether employers they are required to pay in arrears if they do not register on time, well, if they do not enroll on time. Yeah, they are required to pay in arrears. And one thing I want to ask you is that you mentioned as part of your operational challenges in terms that you have a challenge of a low publicity, that people are not very much aware of what the NSITF is doing. Maybe you want to tell us what you are doing in terms of increased awareness of the general public to the activities of the NSITF.
Yeah, these kind of engagements and platforms, the platform you have granted us, that is why we started by saying thank you. We over the past years, we have actually engaged the public through radio, through television, and you can understand that no publicity is actually enough, because we keep on getting new employers of labor, and we also keep getting new employees whose knowledge about this legislation will require continuous engagement. So essentially, at the start, why I was saying, why we were saying thank you, is that this platform that has been created, we want it sustained and continuously engaging, not just ourselves, but other MDAs that have services to render to the public, and putting them to be accountable and responsible to the mandates that have been given to them to administer. So yes, a huge lot has been done, but we still need the advocacy, we still need the engagement with the CSOs and NGO, we still need the media. We can't have enough publicity.
Thank you. What about whether people, I don't know whether I missed it, whether people are required to pay in arrears for not having a rule on time? I don't know whether I missed your answer to that.
Is yes. We usually look at the time that you started operation, and then prorate it, see what you are supposed to pay that you had not paid, and then you comply. Yeah, it's from the time of your operation, you commenced operation.
I see. If in the lifetime of an employee, he did not sustain any injury, will the employee be entitled to the accumulated fund after retirement?
Okay, that is interesting. The concept of social insurance is the pool of resources that will be used to make workers continue to be productive. If every worker who has paid into the fund cuts his limb or gets his eyes sucked out, we obviously know that the money that is being contributed, that 1% will not even be enough to take care of it. We may likely have to go back to government and tell the government that all your workers, so everybody is now having no limb and no eyes. So come and carry your load. So essentially, it runs on the principle of pool of resources that administers to as much minority incident of risk materialization as possible. And that is if we have majority of our workers not sustaining injury, it simply means that one of the functions of the fund or the scheme is to ensure that occupational health and safety awareness campaign is actually has achieved its focus by reducing the incidence of workplace accidents. That too is a service that is being administered with the fund. So the fund is not just kept for us to be managing people whose limbs and eyes are wounded. It is also to manage the workplace environment to ensure that people who go to work come back to their families without accidents. So the answer to that question is that the provision of the law does not say we should refund those who did not have accidents.
All right, thank you. I think that goes back to the Abayomi Adelekun. When you subscribe to insurance, to certain kind of insurance, and you pay your premium and all that, it don't mean that if the thing doesn't happen, depends on the policy, whether you get refunded and all that. And then the next one is from Hope Peters, asking how you evaluate or determine compensation for mental stress.
The act which we will share in section 8 and subsection 1 of it, it discusses about mental stress. And directly, I will just paraphrase what it says. It says that the board shall or may appoint a medical board of inquiry to determine if the employee is entitled to that compensation, and to determine if his mental stress is actually related to the type of job that he had done in the past. So it's a medical board of inquiry that assesses and even gives the scale and rate of compensation in that, and even tells whether such. For instance, if I work in an environment that doesn't expose me to mental stress, and then maybe 2-3 years down the line, I am mentally stressed, the board of inquiry will look into it to determine. So it goes professional. It is no longer at the discretion of the management of NSITF to say, no, this mental stress is not related to your job. It will be professionally handled by a medical board of inquiry.
All right. So 2 other questions coming up is whether the NSITF invests this money like the way the pension funds do, and whether people who register with NSITF have to pay certain registration fees.
Okay. Do we invest the fund? Section 56 of this act, which we will share with you, actually gives the management board of NSITF to invest a reserve of the fund, and on regular occasions run an actuarial valuation on the fund to see its sustainability and its long-term, to see to its long-term sustainability and liquidity, as it were. So the fund you bring in is part of it goes for investment in order to ensure that the fund can actually sustain itself. We can't keep it idle for it to lose value. Of course, the fund also suffers from inflationary pressures. And so if it is not invested or managed well, we may not be able to procure the medical services or compensation services that we have, okay? So when we share that act, the platform may look at that section 56. It's clearly the financial provisions for the fund is that there shall be a fund to be established, and such fund and proceeds from it shall be invested, especially when you go to section 56, subsection 2D gives us that latitude and that leverage legally to invest some parts of the fund in investment instruments.
So John Jonathan, over to you. Please unmute yourself and let's hear your question. John Jonathan.
Okay, a very good afternoon, everyone. Our presenter, thank you so much for such an informative and full session. Now, my question is this. Looking at the ECA, I'm sure some members of the audience may be mixing up the place of the ECA side by side the PENCOM, that's the Pension Act, that pension scheme is. I want you to clarify how or if one substitutes the other, so that while trying to help the public to comply with the, we don't end up mixing up some of these provisions or some of these the laws that we have in place. Thank you so much. Really appreciate it.
From our presentation, we were very clear that as at the takeoff of the Pension Reform Act in 2004, and eventually now amended 2014, the laws were very clear that Nigeria Social Insurance Trust Fund would no longer be rendering pension services. The regulation of pension practice and pension practice, or pension scheme in Nigeria is that Pension Reform Act, currently Pension Reform Act 2014 as amended. At that start, we were relieved of the pension scheme that we were running and asked to comply with the Pension Reform Act now by transferring all pension assets to a PFA, specifically trust fund pension, who are an institution now that is being regulated by PENCOM. Subsequently, NSITF was given its own mandate, which is the employee compensation scheme, to manage the deaths, diseases, injuries, disabilities that arise out of and in the course of work. And this scheme is legally backed by the Employees Compensation Act 2010. It is quite different from the Pension Reform Act. So I hope the question is clear, or the answer is clear.
Yes, let's give the floor to Thank God. Thank God, over to you, please.
Okay, thank you so much. Thank you again for reason of time. I don't want to talk too much on the presentation. It has been very educative and fine. I have two questions. Number one is my NGO was established in 2016, and I didn't use it. It was a paper, but eventually I started using it in 2020. 4 years down the lane. And then, and now I want to, by reason of this opportunity provided by Scale, people are getting to knowing that they are supposed to be part of registration and compliance to NSITF. And you assess, am I going to start 2016? And what is the basis of that 2016 when I didn't really do anything on the 2020? That's number one. Number two, the question is, we are promoting in Scale. How are you going to give us a rebate so that people can comply with compliance in this present time without them really having to be bothered by what they didn't know about before? Because most of the organizations that we have assessed are willing to comply now, but the penalty is carrying them. Is there a way to help us to use the goodwill of this platform to give us a rebate in order to reduce that kind of fear of the penalty rather than the compliance? Over.
I will take the first one. You started operation in 2016. I mean, you registered in 2016 and started operation from 2020. And
yes.
Okay. So the fund will magnanimously give you the rebate you will not pay from 2016, but you will pay from the time you started operation in 2020. And we are not breaking any law, but we would have to, the onus lies on you to actually make it us clear that you actually started operation in 2020. Your tax returns will help us and other supporting documents. Is that okay, sir?
Yeah, that's clear. That's clear. Question 2. Hello.
Hello, TG. That your question 2 was not too clear because you went off at some point.
Yeah,
Okay.
I got it. I got it clear. His question 2 is waiving of penalty or waiving of the backlog.
Giving us a rebate, the CSO community rebate. You know, the knowledge gap has been there.
Okay.
CSOs are not aware. Now we are trying to enforce compliance, and many of our organizations are really willing to comply. But the fear of penalties is creating a problem. If we say, okay, comply for 2022, and then begin the process because of the knowledge, and then if there are issues around social insurance issues, then their workers can be dealt with from 2022, not the one that happened in 2021. So their insurance starts from 2022. They will be willing to comply and we can enforce continuity. Is there a way to give us a rebate on that kind of thing because of the Scale project that is ongoing? Over.
Okay, Dr. Koso.
Yeah. Yeah, I know we are partners in this, and we have over 180 people listening to you.
Yes, I think
and they'll be glad to hear this.
When you introduced me to this presentation, you remember the title you gave me now? You gave me the title of AGM. And so we also have the board, we have management. So you'll be careful not to give me questions that are above my pay grade. You are a managing director of a large CSO. I am just an employee, one small employee, and you're asking me how do I answer that one? So what we want to do is, let's start the process of compliance. Let's start the process of compliance, and then we engage ourselves further on how to help ourselves, to comply fully. But let's start, because the more we waste time in complying, the more we also will be talking about backlog of unpaid arrears, even from when we have known that from behind, we have actually erred in error or ignorant. Of course, you know what we used to say in law, that even though I'm ignorant of it, it doesn't relieve me of its weight and its effects. So I'm sure I've answered that question. It's
yes, sir. Yes.
But let's start complying. Okay, it's only when we engage ourselves, we will see ways that would apply in order to fully help ourselves to fully comply.
So Arinze, Ezukosi, please go ahead.
Okay, good afternoon all.
Yeah, afternoon.
Yeah, my question is still relating to arrears. The Act took effect from 2010. So if an organization has been established before then, I don't know, what would be the case? Is it going to comply from when the Act took effect, or what exactly? Thank you.
I think the earlier answer I made was applies to this too. If the Act, by virtue of its letters and spirits, was very clear that immediately you start operation, the period you start operation and the period you start engaging employees under you to work for you, they need to be covered. They need to be covered. So the last question is related to this. Can we take this as also answered in line with the principle of operational commencement? And then let us start complying. Let us start complying. Let us start complying. And since this platform has been created, you engage management, and then how you comply fully.
All right, Mahmoud. Yes.
Thank you, Mr. Olufela. Thank you, Mr. Diberi, for that elaborate explanation. Mahmoud Abdullah and Allah, I'm the head of Admin and Human Resource Temoko Community Development Initiative. We are working in Borno, Yobe, and Bauchi. So by coincidence, just last week, we received some officials from Nigeria Humanitarian Fund on financial checks, and we were asked if we have registration on this social security scheme. So by coincidence, I received this invitation, and I said, let me come in. And so currently we are working in Yunusari and Ran, Kalabarge in Borno State. This is a frontline exposure to Boko Haram, where just last week about 30 farmers were killed in Kalabarge. So we used to send our staff, and I believe Scale has really helped with coming up with this idea to share this kind of opportunity with the CSOs. And on this note, I want to encourage our CSO members to take this kind of advantage, because it's part of the partner requirement. So I have like 2 to 3 questions. Mr. Chidibere, I want to know, what do you do differently from pension scheme? Because at times retirees couldn't get their benefit for more than 2-3 years. I'm saying this by experience, because currently my mother got retired for more than 2 years and she could not access her benefits. So what do you do differently from the pension scheme? That is the first question. Can you respond so that I can ask the next question?
Thank you, and really our sincere condolence to those families, 30 people who lost their lives in the farms due to the insurgents. Fortunately, you have really mentioned a place that is at the bottom of my heart. And during my youth service, I served in Yusufari and Yunusari and all those environments were quite peaceful, and we enjoyed ourselves in the desert storm.
Yeah,
We are praying that that calm and stability will return to our country, and we will enjoy how our country used to be in those days. And kudos to you guys who are managing those places in social security parlance. We call them the ungoverned spaces. It's actually the provision of the social, one of the pillars of social security provision is that after the military intervention, since the military cannot remain in those environments for a long time, then social security provision alongside CSOs and NGOs are the ones that will put stability in those environments and managing those ungoverned spaces until they stabilize sufficiently enough for them to have the economic security and police security that the state offers. We really appreciate the service you're going. Now, question you're doing for the nation. Going to your question, if your mother was enrolled in contributory pension scheme, PENCOM has become a hallmark for excellence in rendering pension services since 2004 that we entered the Pension Reform Act. We haven't had so much complaint. So if it is under those contributory pension scheme that mommy or mama was enrolled in, please find the PFA. Find the PFA under which she registered and lay this complaint. And don't stop at that. Please push your complaints too to PENCOM because they are going to resolve it. They don't waste time in resolving pension-related complaints. As for us, we pride ourselves in rendering claims compensation to covered employees as quickly as possible. We are, if your document to us is complete, your claims documentation is complete. We are running at making sure that 7 days round the clock that you should receive your compensation or your claims benefit. That is with complete documentation. Immediately your document is complete. The matching order here from both our supervisory ministry and the managing board is that we should pay compensation within 7 days that that documentations are brought to us in their complete form. So we are also working at excellent service delivery to those we owe, recognizing that claims payment sustains and makes the worker to be more productive. Thank you, sir.
Can I give the floor to Salmanu Mohammed?
Yes, thank you very much, sir, for this wonderful presentation. My name is Salmanu Muhammad from Wazobia International Women and Children Foundation. But some of my questions is already answered. But my last question is, what is the difference between pension fund and social insurance fund? Thank you very much, sir.
Well done. Where is your operational area?
It's Kano, sir.
Kano, okay. Well done. Thank you guys for working hard at managing the areas that that you are managing. We are really proud of you. Well done. Well,
thank you very much, sir.
Yeah, pension fund naturally speaks to funds that are paid, that are accumulated to be dispensed at the exit of work when you retire. Okay, while this social security benefits or fund is accumulated to serve specific social needs of our workers. Like, for instance, we have the fund that, for instance, our own here, we manage funds that are paid for compensation to dependents or workers. If somebody dies, they're dependents, we have to take care of the dependents as provided by disabilities too. And then the employee, if he sustains any form of disease, injury, disability in the course of work, the fund that we manage takes care of that employee and help as much as possible to bring the person back to productive life by way of rehabilitation and also medical bills. Okay, yeah, we also do counseling here. We also have counseling sessions to help people psychologically adjust to their new realities of life. For instance, people who no longer have hands, maybe one hand, normally they could run into depression. Irrespective of the volume of money you throw at him, he feels incomplete. But their new reality could also mean that they will be helped to see that they are still human and can still add to capital formation in the state and even be productive at workplace. And there is nothing that is wrong with them, it's just an accident. So we run counseling services here too by the scheme. So that's the difference between pension fund and social insurance or schemes that are run by the state.
Oseni, over to you, please. Make it quick. Thank you. Oseni.
Hello.
Okay, go ahead, please. Quickly.
Okay. I think some of my questions have been answered. My name is Oseni Daniel from Rule of Law and Empowerment Initiative, reporting from Kano. My question is, an employee who work with a private organization and then have his pension being deducted by National Social Insurance Trust Fund, and after some years find himself in another organization, maybe working with an NGO. So the previous money, how will he assess it from National Social Insurance Trust Fund? How can he claim his pension? At what stage can the money be given to him?
Okay, thank you so much, sir, for your question. We have agreed here in this platform that the scheme run by NSITF is Employees Compensation Scheme that is enabled by the Employee Compensation Act. And the objectives and functions are clear. NSITF, as currently constituted, does not run pension scheme. We do not. All pension assets have been transferred to trust fund pension since 2004 that the PRA took effect. And as such, if you have any outstanding issue with, if you have any outstanding pension issue that dates back to before 2004 with NSITF, please do well to go to Trust Fund Pension. They have a desk that takes care of those issues of when NSITF had, or legacy issues relating to the pension issues that NSITF administered between 1993 and 2004.
Okay, thank you. Inoma, please. Okay, Inoma, go ahead, please.
All right then, which means I can go on now.
Go on, please, go on.
I imagine everybody can hear me.
Yes.
Good afternoon. My name is Norma. I'm speaking to you from Women's Rights and Health Projects, WRAP. And my question is, because I must have missed that. I know I heard about a 1% contribution. So I'm not quite clear. Who's supposed to make the 1% contribution? Is it the employer, or is the employer and employee as with the pensions system?
The contribution is employer's contribution. It is not split. It is not split. As a matter of fact, it's illegal to deduct it from the payroll of the staff. From the staff salary. It is a provision that the employer makes 1% minimum to take care of his employee in case he loses, in case he has the eventualities of any work-related accident, which we have mentioned earlier. So it is a payment by the employer, just like the employer pays tax, pays is it the ITF and all that. Is a payment by the employer. Please don't go and be surcharging the staff. It is not legal to do that.
Arinze, you have spoken, haven't you? Arinze Zukozi. I know your hand has been up for some time. You have answered your question. Looks like we can't. Okay. All right. So let me, at this point, thank you, Dr. Wanbozo. This has been very enlightening. It's been very educative. And I look at the charts there, a very nice presentation. Some of the comments we are getting from the participants. This has been very detailed. All right, thank you, everyone. We hope to see you again on the 26th of June when we have the next webinar. Thank you, and have a pleasant day ahead. Thank you. God bless. Enjoy the rest of the day. Bye-bye. Bye-bye.
Thank you.
You have to wait. Bye-bye. Thank you so much, Dr. Wabuso. Thank you.
Thank you. We appreciate. Looking at